Hi there, Serial Trader here. Let's have a look at the major US indices and starting off with SPX. So we didn't end up getting the bottom yesterday like I was taking a stab at there. So I'll go ahead and just drag this wave 5 label down to today's low, although that certainly doesn't mean it's the low. Just means for now that's how I'll label it. So looks like we decided to make one of my fib targets after all. So we've exceeded that 1.32 reverse fib of this wave 4 bounce, and that was around 2670. So we've gone as low as 2651, and then the 2.0 objective brings us down to closer to 2600. The way market was acting today, we could certainly get there tomorrow, although this seems a bit much short term here. And I'll maintain that we still have a bullish divergence on the daily RSI, right? So in our wave 3 low, RSI went as low as 17, and so far on today's low we're still only down to 24, so still clear bullish divergence there. Although if we drop much more, we might basically tie the RSI we had on that, and we'll have to rethink what could be going on here. I'll get to that in a moment. I do have an alternate super bearish count I can throw on this, but it doesn't seem warranted unless things really break down here. Okay, now 4-hour RSI, also bullish divergence there between wave 3 and, as I'm currently labeling it, wave 5. The MACD moving average is still a slight divergence, although lessening. The hourly still showing a very clear bullish divergence on RSI and on the MACD moving averages. So even though we dug deeper, I'm still really favoring a reversal anytime now, essentially. It doesn't mean it's going to happen, but just technically it is positioned for that to happen. Now, okay, so what if I'm not totally wrong, but what if I'm wrong? I'm not bearish enough here. What if this is going to break down faster and sooner than I have it labeled here? Well, that's possible. And let me just get these minor wave labels out of the way. Okay, and well, how else can I interpret this, right? And I'll just move this out of the way and get all these. I don't want to get rid of them because I'll probably use them again, but just drag them all the way a bit there. Okay, and let's get rid of the fib extension as we have it for now. So what if it's something more like this? Okay. Well, I guess since I'll do minor, I'll use this one. So what if we have a 1 down, 2 up, but then, okay, and this is where it gets more interesting, we have another 1 down, 2 up, and now we're coming down in a 3, in a 3 of a 3, right? So this is possible. So we'd come down 1, 2, 1, 2, wherever we end up 3. Then we'd have this lesser degree 4, and then a 5 of 3, and then finally have this larger bounce up, and then lower still in another 5, right? This is certainly possible. So if that's the case, I mean, we're just going to keep dumping down here. Maybe even we'll test the, February lows or the March lows there. You'd expect some sort of reaction off of that area. And then, keep dumping again. Now, this is the maximum uber bearish count where we're just collapsing, we'll be down 50% on this market in just a matter of, 2 or 3 months or something in that kind of scenario. Possible. I'm not going to go there until we have some confirming price action, though. I'll just delete all this. I'm still more heavily favoring the more reasonable, but still bearish, but more reasonable wave count like this, right? And we'll stick with that until the market really, really forces us to switch. So it just seems more proportional, right? let's see here. 1 or A, and then we should be ending fairly soon here if this is the right interpretation. So then we have our 2 or B up, and then that would position us for the next impulse wave down. So at the moment, we'll still go with this, but just wanted to present it as a possibility, because if we can't catch a bid here pretty soon, I mean, there's only so far this can go down and still be a valid interpretation before we have to start thinking more along the lines of the other wave count I showed. All right, now that being said, I have some things to show on the Thinkorswim candlestick chart. So let's go have a look at that. So yeah, we've broken down here big time. Still basically finding resistance on the T line. And yesterday's bounce up, you know, now that we have today's price action, basically still stayed under the T line and also under the 3T line. Now we're well below both of them. Still see a minor little bullish divergence on our daily stochastic oscillator here. Now what was I going to show here? Yeah, not really any clear support levels until this triangle wave E low, which is at 25.95, so around that 2600 area, which is where that second fib target is as well. And then after that, you only have these two support levels, you know, 25.50 essentially, and then closer to 25, that Feb low. I doubt we get there just in one shot here without having a, you know, big bounce, corrective rally, bear market rally. But, you know, let's see. Now, okay, on the weekly chart, now the week's not done yet, but I figured I should show this. So weekly chart, we had that bearish engulfing from the all-time high, or almost that double top, and then bearish engulfing. That kicked off brutal selling that 1 week. Then we had a very weak bounce on this weekly chart. It was weak. And now we have apparently another bearish engulfing forming on this week. And we're well below the 50-week simple moving average. And how long has it been since we've been below the 50-week simple moving average? Looks like back here, I believe that was the Brexit bullshit that got us down there, if memory serves me right. And that was at 1810 that we hit. So yeah, it's been a long time since we got below the 50-week simple moving average. That last time we bottomed below it was 2016, that Brexit ordeal. So yeah, it's unusual territory to be in here. The weekly oscillator is not quite in the oversold condition, although it's certainly almost there. Now, one thing I really want to show, so weekly, yeah, looks horrible. Now, monthly, this is something you don't see too often, especially on the S&P 500. Currently, now the month isn't over yet, but if we close, well, if we close anywhere near these levels, we have a huge monthly bearish engulfing candlestick, engulfing 1, 2, 3, 4, yeah, 4 prior months. So extremely strong monthly sell signal. If that's not a kickoff to a, you know, larger bear market, I don't know what is as far as signals go. Okay, so I just thought I'd show all that. Now, before I go too far, let's go through what happened today as far as trading. So I'll go to the 10-minute price chart. And let's look at what happened. Okay. So I'm just going to get a, just so I can illustrate this and kind of show it to you how I was viewing it in, you know, real time. Just cover this up here. Not going to cover it. We'll black cover it. No, it won't. Okay, forget about that. Anyways, I was just going to cover it up so it looked different than, you know, already knowing what happened now after the fact. But so yesterday, from the bottom, we had what looked like a nice 1, 2, 3, 4, 5 up. In the last video, I said I'd want to see, you know, a correction down. I showed some Fibonacci levels to be looking for, and just show the common ones here: 50, 618, 786. And I was watching this, and you know, we were coming down. We got in this range between the 50 and the 618. It failed there. But then we got down to the 786 here, and started showing some nice support, and actually started reversing. So after that, I thought, wow, we got 5 up off the bottom. Got a nice deep, you know, potential small degree wave 2 retracement, finding support on the 786. We're starting to reverse. We got above the, you know, 10-minute T line. The 3 T line crossed above the T line on the 10-minute. So at this, you know, in this area, I closed the puts that I had that straddle on from yesterday. I left the calls in place. Actually added some calls, and I closed the puts for, you know, a nice profit. And also added some long futures, and then I put my stop just below the actual lows here. And I mean, I could have put it tighter and put it here, but I didn't. I gave it more wiggle room. I put my stop just below here, and the level on the futures was slightly different. I think it was 26.92 or something on the futures. And after coming up looking good, trade starting to work, started coming back down, and then we broke that level, and then okay, choppy. It's not really collapsing yet, just meandering. I'm thinking, oh, are we going to get a double bottom, like a almost 100% retracement? And then we broke here. Or sorry, no, we didn't break here. We found support just above the bottom. Okay, so we got as low as 26.91.91 here on the cash, and the actual low is 26.91.43. And then again, we started reacting up. So my stop hasn't hit yet. We started reacting up, got above the 10-minute T line. I thought, wow, double bottom, almost 100% retracement. Looked like we had a little 3-wave, deep wave 2 down after a 5 waves up. Still, you know, didn't fully retrace it. And we're here. And then finally, the market just gave up, tanked, got stopped out as soon as we got below that key level in the futures. I think 26.92. Futures got cleared out. I just did a mental stop. Took off some of my calls. I've left some in place because I do think we're going to bounce here pretty soon, but took a lot of them off. And obviously you had to, you know, take some managed losses there. So just a lesson. I mean, no matter how good the setup looks, and you got 5 up, you got a nice retracement, you have a reaction off the retracement. It still doesn't mean it's going to work. I mean, more often than not, it's going to work, but this is just a good example of where it still failed, and it still just kept going down. And from breaking the lows at 26, let's call it 26.90 or so on the cash, went as low as 26.51. So another 40-point decline in short order after breaking what was already a very extended looking bottom previously. So I just thought I'd point that out. And at this point, I'm still looking to be a buyer here, but before I add any more size on, I have to see this thing starting to reverse somewhat convincingly. If you just keep throwing size, and this thing just, you know, does the super bearish count I was talking about, you could lose a lot of money very quickly. So despite this really looking like it's going to reverse and have a, you know, bear market bounce, bear market rally, 3-wave rally, it's gotta start doing it before you get too aggressive. All right, so that being said, I think we're done with SPX, and we'll go to the Dow Jones Industrial Average. Okay, and Dow Jones Industrial Average, we've now hit the 1.32 objective quite nicely, and that was 24,549, so we see 24,550. Went as low as 24,583, so pretty much bang on. And so the Dow's done what looks to be 5 waves down, or if it's also in the super bearish wave count, then maybe a 1, 2, 1, 2, and we're coming down a third of a third. Again, doubtful, but you never know. The Let's see here. That's the daily chart. So we got the weekly. Oh, you can also see that T line still acting as almost perfect resistance off of today's high, right? So we'll go the weekly chart, and Dow also looks like it's forming a weekly bearish engulfing if we close down here, and actually we'd have to recover quite a bit of this week to not do a weekly bearish engulfing. And again, just finding near perfect resistance on that weekly T line. That's essentially the high of the week is around the weekly T line. And we're losing the 50-week simple moving average on the Dow as well. And again, not since back here on the Brexit lows did we do that. Okay, and I'll bring up the Dow monthly because wouldn't you know it, the Dow is also doing a monthly bearish engulfing candlestick, so far engulfing 2 prior months, and currently below the monthly T line as well. And yeah, again, has been since Brexit that we've been below the monthly T line. So some pretty significant technical things happening here on major time frames. It's always good to look at those major time frames, not just focus on the shorter time frames, because sometimes you can't see that something really big is starting to happen if you're just looking at shorter time frames. Although I would argue that even the daily here looks pretty ominous. Okay, so that's the Dow Jones Industrial Average. Nasdaq Composite. Okay, Nasdaq Composite looks like we have a nice 1, 2, 3, 4, 5 down, but again, if it's super bearish, 1, 2, 1, 2, and we're coming down a third of a third, possible. We'll know soon. If we just can't catch a bid here in the next day or two, I would suspect that's where we're going, because at this rate, we'll slice through those Feb lows in at this rate a couple days, which is crazy, but that's what it's looking like now. Now, still expecting a reversal soon, but just saying, be prepared mentally in case we are in that ultimate bearish scenario. Okay, so daily T line providing strong resistance for the Nasdaq. Weekly candlestick chart for the Nasdaq. So we had that big weekly bearish engulfing 4 prior weeks, then a huge sell-off, week bounce, not even up to the weekly T line, now forming another weekly bearish engulfing, well below the 50-week simple moving average, almost getting you that oversold point on the weekly oscillator. So really all 3 major indices here very much showing the same picture. They're all in agreement. They're all forming almost the same pattern. So you're seeing that very high correlation that you see during these volatile events. Now, Nasdaq monthly chart. And I'm sure you can see where I'm going with this. But Nasdaq monthly chart, monthly bearish engulfing 1, 2, 3, 4. Yeah, 4 prior months. If we go down a little more and close down there for the end of the month, it'll be more like 5 or 6 prior months. But we'll see how we close October. Well below the monthly T line. Maybe we'll find a little support on this 20-month simple moving average, but wouldn't hold my breath. Other moving averages don't seem to be giving much support at this point. So anyway, Nasdaq very much in alignment with all the others. Now, VIX. Let's have a look at the VIX. Now, VIX is still making me lean a little more towards the less super bearish scenario, because we've still made a lower high in VIX. So on our wave, what I've labeled as wave 3 down on SPX and also the other indices, we made our VIX high at 2884. Even today, with the ass raping, we've still only made a VIX high of 2638 and closed at 2523. So I suppose we've closed higher on VIX than we did on that day that we did the wave 3, but intraday still spiked higher. So yeah, if VIX gets going much more, if we get above this level, this will start adding credibility to that mega bearish count. But hasn't done so yet, so we'll wait. But yeah, if you're gonna try dip your toes in again, catching a falling knife can be a messy battle, as I felt myself today. Despite this is another interesting thing. So despite being in the right direction here, I've been bearish, you know, since we made this nice bounce up here. Position bearish, rode a lot of this down, made some good profits, you know, got short in the right place. And then today, I just wasn't bearish enough, and now suffering some losses, although obviously still made more previously than lost today. But I'm just saying, even when you have a good grasp of what's going on, sometimes you can still get a little spanking here and there, and that's just trading. All right, that should be good for now. Serial Trader signing off.